this sort of stuff. So right here, 1, 2, 3 candles, that there is a sufficient order block. And price came into the order block, but it didn't come to the last candle. It missed the last candle just about. So you could have got in on the order block as an example, and that there can be your point of interest. So instead of taking the last candle as your point of interest, take the move as your point of interest, because you can see price came in, and that's where it gave us that 5-minute entry within there, which we run over. So sufficient on any time frame. Yes, any single time frame you want to go on. So even if we go up to the daily time frame, this is your order block right here. So, you know, 1, 2 candles in our point of interest, we could easily sell. Now, luckily, I think we've gone up to the last candle anyway. Do you count the wicks and order blocks? You can, you know, because on a smaller time frame, it depends. If you're on a higher time frame, then you can, because there's that won't be a wick on a smaller time frame, if that makes sense. So we're not going to have a wick on a smaller time frame. On the smaller time frames, I'd rather count the bodies because there's not a lot of volume in there. But that'll be on the 1 hour. That'll be price action moving higher. But if we go down to the 1 hour here, we can see price following up. Now, why are we interested in buying here? Well, the reason, because typically we want to buy when price is low. You want to buy at the bottom of the range, and that was in here. The reaction happened from this imbalance here. You should always be looking to the left. When you look to the left, you can see why price has moved higher. If you saw this expansion, think to yourself, what's happening and why is it happening? So we've made a low. Now price has pushed higher. Look to the left. We can see there's imbalance. That's the reaction point. Get all of these time frames on as well, because then you might even end up seeing another candle somewhere along the line. Doesn't look like we do so far. It looks like it's just imbalance, which again, that's fine. So yeah, even better, imbalance. And we saw price push higher. That's our expansion to the upside. We want price to come back down. 5-minute entry in here. So the reason we're going to get in here today is because we're not done on the range. The range is still moving. Technically, price shouldn't close any lower at the moment because we're attacking this high. So let's attack this high and go by what structure's telling us. Now we've got ourselves this consolidation within this imbalance. That there is your classic manipulation, because that there is enticing people to sell in this market. Okay, it's enticing people to sell, but that's when, as smarter traders, we're going to go on the higher time frames, and we're going to obviously see that price is actually bullish, and we're on a higher time frame looking for price to move higher. So the 1 hour shouldn't really be respected because the 4 hour is bullish. This is counter trend movements coming down and pushing up. All that's doing there is forming liquidity. Price drops down, pushes higher. We've got this point of interest area right here. So this order block we can use. We're looking at price to come down. It came down today during the New York session. And you could have potentially looked for a move in here. So let's see if we found one. Price pushes in. So this is when price is coming into the area. Obviously, price pushes above higher. Now, what could save you from getting stopped out is that there's nothing attractive about that move to the upside. When you look at this order block here and this move up here, you can see the imbalance with a nice looking order block. No imbalance really here, apart from this one here, which would have been a decent entry, to be fair. But looking above here, you know, if price is breaking below there and it starts to make lows, that's a sign it's going to come for your high, for your low, sorry. So if you look at the line chart, price is your accumulation here, made a high, made a low, made a high, broke the low. It's actually distributed. So that's a sign that price is actually going to start coming lower. So you can see the distribution. So potentially that there could get you out of a stop loss. And also, if you're unsure on the distribution on the smaller time frames, that's absolutely fine. All you have to do is wait for evidence. So, you know, looking at a smaller time frame, what can we see? Well, we can see price. Oh, do that again. We can see price is broken lower. It's came back in. Really nice sell opportunity there. Price is making lows, highs, low, high, low. And then what happens? We push above. We break structure. So what can we identify on this time frame? Well, it doesn't look like price actually came back down to here, but well, technically it did. because if you look at the imbalance right here, we did fill the imbalance. So it only came into this imbalance and then it pushed the upside. But that there is quite a tricky trade to get into. Also, you're not going to have very good risk reward, because if you got in on this imbalance, that's a big imbalance. You're going to put your stop there, you know, just to take it up to where it is now. It's a 3-1 for being in it for most of the afternoon, 4 hours worth of trading. You know, we're looking to get in and out a little bit quicker. So where could we be looking to get in here somewhere? Well, we go into the 1 minute time frame or the 2 minute time frame, and we literally just see if we can walk price going up. So we've reacted in this imbalance, we've pushed higher. There's nothing here that looks that interesting at the moment. We've pushed higher, we've come down, nothing really. So the entries aren't really there. And this is the thing, this is why you need to focus on just one pair, because this is a lot of action going on right now. And it's all just real crap, to be honest. And there's nothing there really setting us. We had a big push there, a big push down. You can see prices obviously pushed higher, came down again. We haven't taken the high yet, so we could potentially look for a smaller entry. You know, the entry I can kind of see is even, I wouldn't even say that imbalance there. This imbalance could have been okay for an entry, but again, by the time it gets too high, you can see price starting to get a little bit choppy. That there is a sign that we're coming for the high and prices isn't very interested anymore. But if you know when this actually happened, you know, this is all after 4 o'clock. You know, so look at the price action here. It's just moving quite slowly. But if you go back into the 230 area, you can see price moving a lot better. So you're getting a lot more cleaner opportunities. So it's just interesting to see the difference in price action. You know, time and price really is everything. I really wouldn't trade much past 4 o'clock on a GMT, you know, because price does go a bit funny. Looking at NAS today, we swept below here, and you know that the aim was to get into this high here. There was a trade that I took in here on the 1 minute time frame, and I was just playing off this imbalance. The reason I played it was because we came lower and aggressively pushed higher. The imbalance was in this order block. So 1 candle, 2 candles. This was the area here, because that is typically a sign it's going to come for the first imbalance, and there wasn't really any other imbalances lower. So you can see there, that is an imbalance, wick to wick. And it comes in, fills it perfectly, and then pushes higher. So that would have been, you know, your only target really would have been the next high. It's a shorter term, but because of the entry, that gave us a 1 to 3. So that was absolutely fine. You know, looking at what price has done since then, and if you get confused and it kind of looks a bit messy, just go up a couple of time frames and look at what, you know, the higher time frames actually do it. And we can see that realistically, you know, we came down to this candle here, you know, on a 1 hour candle. You know, we can see price coming in to this candle here. So it looks a little bit cleaner. And we just come in, swept these lows here. That looks like equal lows. Liquidity, grab, pushes higher. Your entry is order block, imbalance. So right here is a really nice entry. But we've not got any targets. So there's no point taking this entry. But if you're playing within imbalance and an order block, that there is a really nice entry to take price higher. You know, and after here, there's nothing. It's just too choppy. You know, looking at S&P, again, we've taken Monday's high. Look at where we're off to. We're in this imbalance. It's evident we're looking to try and get to this candle here. If I was looking now for what price should do tomorrow, you have to identify the previous daily candle. So when price is here, you can see daily low from previous day and daily high. Yes, it is, Isaac. There's a few different phrases on your broker, so I'm not sure. You know, my one's got quite a weird name. So looking at the daily candle, we can see price. You can see if you look really closely, I'm just going to go in, there's a wick that came into the candle and then pushed higher. So it's about going onto a smaller time frame, identifying what's happened. So we can see this is it here. The wick on the daily candle filled in some of this imbalance, and we can shower, you know, we can shop all the way down seeing if we find anything. What do we find right here? 1 hour candle. So price is moving higher, comes down, takes all this liquidity, the internal liquidity that we spoke about the other day. Again, if you're unsure on that, watch the video. If you're still unsure on it, don't worry, it's all going to be explained in the course. And then what happens? Price comes into this area here, pushes up. So now we can look into this area here, big candle. There's our candle here. We can identify this range. So, you know, this here is our point of interest. We can see, even without going down a time frame, we got the entry right there. You know, if you want to just play on the 1 hour time frame, you know, look at what's happened. We've come into this 1 hour candle, we've accumulated. That's a valid entry. Like if you took that on the 1 hour today, right now you are up at 8 to 1. If that's a 1% risk, that's 8%. If it's a 2% risk, I mean, it's crazy gains. But let's see if we can take it a level higher. You know, we can see price moved aggressively and then took a bit of a while to push higher, which isn't ideal. You want price to come down a little bit slower and the aggressive move happens. You know, you're playing within this area here. That's generally a really good entry. But, you know, on another time frame, what do we get? You can see here, price pushing higher, 5-minute structure break. Identify the trading range. We've got the area, the discount area right here. Imbalance, institutional FU candle, because that there took out this little bit of liquidity here. You could have played off this imbalance. If you had your stop loss, so what I used to have a terrible habit of doing is putting my stop loss here. And you have no idea how frustrated I used to get when price would go in my direction and miss me out by a pip. There was nothing more frustrating, but that's when you learn the art of following price up. If you miss this trade, it's about identifying how we can get into this area here. I mean, we're only on a 5-minute at the moment, but let's see what happens maybe on a smaller time frame, a 3-minute time frame, if I don't lose it. So even on a 3-minute time frame, we've come into the discount area and we can see prices accumulated right here. It doesn't look as clean, so we can go into a 2-minute area and just shop around these time frames, because you can see there 2-minute doesn't look that clean. The 1 minute is clean, so this will probably look a little bit better wherever it is. Here we go. So price moves higher, and then realistically price comes down quite aggressively. I can tell you now, no one's really looking to take this because this is an aggressive move down. It looks like price is going to completely dump below here. If you missed that, that's fine. If you took it on the 5-minute, that's fine. You know, we did get this liquidity grab here. Price in this consolidation. This is your expansion. Aggressive retracement, could be a reversal to the downside. It actually closed below, so you wouldn't be getting in here because of the candle closes and things like that. Looking at what price did then, it pushed higher. And what happened? We came back to this candle. So this is an institutional candle. Why is it an institutional candle? Because it's the last down candle before the up move, and it's not a candle which is taking out liquidity. So it's an institutional candle. It's just the last candle before price moved down. It's a candle which filled in this imbalance as well. So this is a really nice entry right here, which would have played out, again, a bit too late in the day, but even if you take it there, that's a 3 to 1. If you held on to it, you know, where price currently is now, that's a 23 to 1. A 23 to 1. This is how insane price action is. This is how good it can happen. And I can tell you now, guys, at the moment, the first 2 weeks of January are crap. This here happening in New York session, you will clean up completely. You know, London, New York session, this is when the trades will happen in a couple of weeks' time, and you'll get yourself in on these trades. You know, it's just about understanding where it is. So, for example, I'm happy to get into this entry here because price is moving slowly down. It's flagging down. That there is scary. No one wants to get in on that. It's taken this liquidity down here. So when price is flagging down a bit slower, we can get in. But let's say you missed that entry. You know, you can still follow price up. When you see a big push to the upside and you see the imbalance has been created,